Hello guys, welcome to the Nailing FX and Crypto. I'm just getting my camera sorted. It seems to not be loading, so give me 1 sec and then hopefully you'll see my face in a minute. Give me 1 sec. Okay, so that should now, there we go, there I am, hello. Welcome to Nailing FX and Crypto. Hopefully it's obvious what we'll be covering today, what we're looking at. Now I'm just making sure I've got all my chat boxes up, so for those of you that are watching, if you want me to look at any particular markets or any particular currency pairs or cryptocurrencies, if you have any questions or anything like that, by all means, please do put them in the chat boxes. I'll keep my eye out for them. Now let's just make sure that the disclaimers are being covered. There they are, top left-hand corner of the screen. Of course, it's important that with disclaimers that we read them and just understand, not just from a legal perspective, but to understand what we can expect from videos like this. They are demonstrations of how we do things. It's up to you then what you do with that. Now let me just make sure I have all of my chat boxes up. Okay, cool. Now we started a little bit late today, 5 minutes, so we'll finish 5 minutes later, so make sure you guys get the entire session. Now, let's just make sure that we understand what we're going to be going through. So in these kind of sessions, we will go through the current market environment, closed trades, meaning trades that we put on before that have now closed either for a profit or a loss, trade management, any open positions that we have, and then we'll look at new opportunities as well. So if I just bring up a little reminder for me what we looked at last time, we'll start with that, and then we'll look at new opportunities. As I said, if you guys have questions, you let me know. Now, if you are watching this recorded and you have questions after the fact, you can email me, becky@traddictiv.com. You could also email support@traddictiv.com. Both of us happy to help. There's also a link that I'll always point you guys to, which is tradewithufos.com/Becky. Now that link will take you here. From here, you can get the apps that you might want to use on different platforms. You can book one-on-one coaching with me. You can also come down here and ask a question in public for me so that I can then answer it in public and everybody can learn from this same space. It also means that because you've posted the question publicly, I might even be able to take it and do a whole video on it. So rather than a typed answer, you might end up actually with a whole video to explain the question that you have. So hopefully that helps you guys as well. So ideally, this is where you'll come to post questions once you've logged in. So it's tradewithufos.com/Becky. Okay, so let's have a look at what we placed last time. Now this is one of the ones, it's always horrible when this happens. This was a Euro Australian dollar. We used on this one, I believe it was the 4 hour on the left hand side and the 21 minute on the right hand side. So let's just squidge this right back. This was from the 7th of October. That's when we placed this trade. Now, unfortunately, we missed it. It looks like we would have been in it, but unfortunately we missed it. So let's just move this out and spread it out and see here what happened, which is frustrating when these things happen, but it's life, it's the markets. So this was placed on the 7th of October, and in the time zone that we're in, it would have been placed around about 2 p.m. Now, the trade actually came in at early hours of the morning. So we put it on round about here, round about this sort of time, expecting that price might come back up and hit that area and fall down from there. It didn't. Instead, it just fell and just kept falling. So we missed this trade, unfortunately. We were a little bit late. Obviously, our session was a few hours after this would have already hit. We missed a second touch, which means that we missed this entire move, which is, again, like I said, frustrating sometimes when that happens, but hey, that is life. Now, the question remains when we miss these trades, are they still valid? Now, although this trade still has probability to the downside when it comes to the climate, what we're obviously lacking is the fact that the EMA value, which at this point is 1.5561, which is right about here, the EMA value is nowhere near coinciding with that UFO. So we would have to cancel this as a trade and perhaps look and see if we have new trade opportunities with this. We'll come back to that in a second. So that was a trade that we placed last time that was actually cancelled. We missed that trade. We missed the move to the downside. Now I'm just going to close a couple of things so I can more easily see the chat. I'll look in both directions as well, check that I'm on top of these. Okay, so that was the Euro Australian dollar, and then we had the New Zealand dollar yen. We used Amanda data. There we are. Now on this one, I think we had the weekly, and therefore the 144. And I'm just going to squidge it all up, because it's really unsquidged. Squidge it all up so we can see what happened here. Okay, now as you can see, this one would have been a loss. Now, depending on how strict you are with looking at the markets, depended on how much you lost in this scenario. Now, what I mean by that is we placed this on the 7th of October when we had a thick red dot as our weekly auto climate. Now, by the 11th of October, the start of that candle, the 11th of October, we had a change of climate. The 11th of October was this candle here, when that candle first started. The 11th of October finished, it would have already gone through by then. So let's say you checked it in the morning on the 11th of October, you could have got out somewhere between the entry and stop, and therefore risked and lost slightly less than what you would have been risking if you'd have left it. If you'd have left it, then you took the full stop out. If you'd have looked at it, then you might have cancelled it out or stopped it out manually somewhere between the entry and stop and lost a little bit less. Either way, it's a losing trade. So it just depends on how strict you are in looking at it as to how much you lost. But either way, losing trade with this one, and unfortunately very slightly missed out on a winning trade on the other one. So overall loss from the last session from the two trades that we put on. So what we'll do now is we'll look at new opportunities. We'll look at new markets that we can be trading. Now what we'll do first of all is just come to the economic calendar on FX Street. Now we do this, and I'll show you what we filter. So come to the filter, and I'll choose the main currencies that we trade. So that's the US dollar, the pound, the euro, the Australian dollar, the Canadian dollar, the Japanese yen, the Swiss franc, and the New Zealand dollar. Those are all of the majors, right? These are all of the, when compared against the US dollar, they're the majors, or they're the minors if we use them with each other. We then want to make sure that we are looking at high impact news. We're then going to apply the filter, and then we're going to make sure that we've got the right date set. So from this week to next week. Let's give us the next week. The reason I do the next week is because we often would be swing trading when we trade Forex. So when we're swing trading, our trades might last a few days, maybe into a week or so. So if we have a good idea of what's coming in the next week, it gives us an idea of what to do. Now the reason that we're looking at this is because we want to know if we've got lots of high impact news coming out on a particular currency, then we might want to avoid that. Because a lot of high impact news might create high volatility, which means it moves a lot. That can be good if you're on the right side of it, but if you're on the wrong side of it, that can be damaging. You can get slipped, lose more than you want to lose. So we want to look at this and perhaps avoid, or at least maybe manage our risk a little bit better or tighter on trades where we might be looking at specific currencies that have high impact news on them. Now saying that, today we have some news coming out later on. This is all in, I can't remember, see what time zone that is. It's loading for the time being. I think this is in Eastern time, I think, which means later on in the evening we've got, no, this must be my time, 8 o'clock European Council meeting. That would mean that would be meeting in the early hours of the morning if this was Eastern time, so in which case this is my time in the UK time, British summertime at the moment. So later on this evening for me, which will be later on in the day in the States, we have some news coming out that might affect the euro. In fact, that's all day. We have some Aussie news coming out tomorrow, more euro early hours of the morning, pound early hours of the morning, Canadian dollar early hours of the morning as well. So over the next few days before the end of the week, we've got a couple of things on the euro, Aussie, pound, Canadian. It's not as if this is just one particular currency. Now, something to bear in mind is Wednesday next week, we have quite a bit coming out on the Canadian dollar that might affect the Canadian. So perhaps what we might do is say, okay, Canadian's got a few things coming up and a lot of things coming up. So let's not necessarily avoid it entirely, but let's make sure if we place 2, 3, 4 trades, only one of them has the Canadian dollar in it, for example. That might be one way that you interpret that. Otherwise, let's say we do put on a Euro Aussie trade, for example. Just keep an eye. Keep an eye on what happens with this news. You might want to close out of it early if something changes beforehand. So let's now go back to as we always look at, our Forex Scanner on TradeStation to see what available trades that we have. Now it looks like on the daily climates, I prefer to start on the bigger climates personally. On the daily climates, we don't have any opportunities on the majors. The reason I'm saying that is because we don't have any of these yellow boxes. These yellow boxes tells us that we have opportunities that are close, opportunities that are likely to hit soon. And we have no yellow boxes here. Now on the minors, which we have on the right hand side, we have 4 yellow boxes. However, we only have 1 opportunity. And that's because these 2 here, see it says hopeful, near hopeful in that box. We don't want to be trading hopefully, we want to be trading sensibly. So we're left with those 2 at the top. The top one, which is the pound Canadian, this box here is a grey box. That tells us that it doesn't actually have confirmed probability either way. We want to trade where we have either confirmed probability up and therefore we buy, or confirmed probability down and therefore we sell. If we don't have either, no point trading. So what we're left with is the pound against the pound against the Swiss franc, which is good because we didn't really see either the pound or the Swiss franc feature very heavily on our economic calendar either for the next week or so. So we'll start with the pound against the Swiss and we'll use TradingView to do that. When we come back to look at smaller time frames, if we see opportunities here on the smaller time frames on the dollar, we'll go to MetaTrader to use that. So I'm going to be using different platforms because you guys are going to be using different platforms. So hopefully at least one of them that I use will make sense to you, I guess, in the way that it's used mechanically. Okay, so let's go to TradingView and look at the pound Swiss on a daily climate. So pound Swiss. By the way, of course, there will be some people, I'm just going to use Oanda data for this. There will be some people that are watching that have been trading Forex for years, that might have been following us for years, and therefore everything I'm saying makes complete sense. It might even be a bit slow for you. There will be some people that are watching this that have no idea, never traded Forex before, never followed us before, don't know what I'm talking about. And so I'm going to try and balance those 2 things and explain what I'm doing step by step. I won't be able to go into all of the depth because I'll take hours and hours and hours to explain every single step, but hopefully I'll explain it in a way that makes sense. If you do have questions, don't worry. The more videos you watch, the more it makes sense, and you can always ask questions anyway. I'm always happy to clear things up if I do say anything that confuses you. So let's take a very quick look here and see if we have an opportunity, and we do. Brilliant, we do. That was a good, lucky first try here. So let me just explain why I've said that. We are looking at 3 different things, and in this case we're actually looking at 3 separate pieces of technology to confirm to us that we have a probable trade. Now, why are we using technology? Firstly, because we want to be objective. We want to be making decisions that are based on technical, statistical, objective data, not how we feel, what we think, what we see. Humans are not very good at being accurate on those things, so we want to use technology to make this as objective as possible. Why are we using 3? Because the more things that line up, the more probable it is to work. If we only used one of those 3, for example, might still be a good trade, but it probably has less likelihood of working for us. So we combine 3 of them. You may choose to just use 2 of them or add more things. For us, it's these 3 things. So the first thing we look at is this down here, this AutoClimate. AutoClimate is a free app on most platforms you can get it on, and AutoClimate is telling us where we have probabilities, up, down, or nowhere. Now, ignore the lines. If we focus on the dots, we have a thick blue dot that tells us probability is upwards. If probability is upwards, we should look to buy. If it was a thick red dot, that tells us probability is downwards, and therefore we should look to sell. And if it's a thin dot of either colour, that tells us not enough probability either way, therefore do nothing. So in this case, we have a thick blue dot, probability upwards, we know we should be looking to buy. But then we need to look at 2 extra things to see where we buy and whether or not it's got good probabilities. So first thing of the remaining 2 is we look for these green UFOs. If we're buying, we look for green UFOs because the green UFOs show us where buyers are. UFO stands for unfilled orders, meaning it's showing us where buy orders are. It's showing us where buyers are. If we were selling, we'd look for the red ones. The red ones show us where sellers are. But because we're buying, we care more about where the buyers are. So that we can now combine probability upwards with lots of buying. The more buying there is, the more likely it is to go up. Therefore, we want to know where there's lots of buying likely to be happening so that we can buy it from there. We even have the prices on the right hand side that tell us exactly where, between those two prices, where we have those buy orders. Now, the third thing we want to do is add in the EMA, which is this little blue box there, and it coincides to that blue line. The EMA stands for exponential moving average. EMA means it is an average of price. The line, the number that we get from the EMA is an average of what price has done over the last, in this case, 9 candles. So it gives us an average of price over the last 9 candles. It's exponential because it puts more weight onto the most recent ones. That's how that works. Now, why is this relevant? It's relevant because loads of people use moving averages, and particularly this EMA, to help them buy or sell. If price is above the EMA and then comes down and hits it, people buy, just at that price. If price was below the EMA, comes up and hits it, people sell. In this case, if price were to come down and hit the EMA, people are likely to be buying it. Not just retail people all over the world, but also funds will also do those kind of things. So what we're doing then by combining these three things is we have probability upwards. So we've got a climate of probability upwards. We've got buyers. And if the EMA is in the same area, and the EMA is, it's around about here, then we've got buyers, buyers, and buyers. Buyers at the EMA, within buyers that are there anyway, in the context of an upwards climate where we have buyers pushing price up. So we're adding these three different elements to give us most probability that price continues to go up. So hopefully that makes sense. So in this case, the EMA value is 1.2674, which is within our UFO, so we are going to take this trade. Now I'm going to use the Fibonacci retracement lines not as they were intended. I use them as a drawing tool. I do this because it's easier for me to then see where we got in, where we got out, what went right, what went wrong. So our entry, we are going to use the top number from the UFOs. Again, very mechanical. We're using data that tells us exactly what we're doing. So that top number from the UFO is 1.26914. Now obviously that last number is a percentage of a pip, so we're going to round it up to 1.2692, and then what we're going to do is add a couple of pips to cover the spread. So 1.2694. Now our stop loss, let's take that bottom number, which is 1.26676. We're going to round it down to 1.2667. Yeah, 1.2667, and then we're going to take 5 pips off to cover the spread and a little bit of wiggle room. So that's what we're doing there. That's where our stop loss is. That's where our entry is. Now we need to figure out where we're going to put our targets. By the way, for those that notice this, another good thing going in the favor of this trade is that it's amongst buy orders on bigger time frames as well. So even better. Now we need to know where we're going to put our targets. Now, first target is what we call our safety target. And our first target is always 1 to 1 away. And we do that deliberately so that even if price comes in and goes a little bit in our favour and then against us, we don't lose any money because we would have taken a profit about 1 to 1 away. If it goes in our favour, so we have a target here and a target here, if it goes in our favour or it hits that and then it hits the second one, great, we get an average of those two profits and that's what we make. So what I've done here is I've just put in the entry and stop into TradingView. That tells us that it's 32 pips of difference between our entry and our stop. So if it's a 1 to 1, then our target should also be 32 pips away. Very easy. And then TradingView does the maths for us and tells us where that needs to be, what price that is. So again, just use a drawing tool here, draw it on the chart, and I'll type that number in, 1.2726. That would be our first target, our safety target, which is 1 to 1 away. Now, I always make sure that I risk $50 on each side of the trade. We're going to place 2 targets. So $50 is risked on the first half, $50 is risked on the second half. Why? Just because together it makes $100. It's a nice round easy number to do as a demonstration. You might risk $2, you might risk $1,000, you might risk $1, whatever. You need to risk what you're comfortable with, what matches your trade plan. I'm just using this as an example. So check that everything's right, place that trade. Then we need to put in our second target. Our second target, so we're going to have exactly the same entry, exactly the same stop, it's remembered it, exactly the same risk, but our second target we're going to take from here. Now let me just squish this out to really make this point. Our second target, if you think about it, we are buying with other buyers, with buyers at the EMA, in the context of a buying climate. What can stop all of that buying? Selling. Lots of it. So we come across to our bigger time frame and we find where there's a bunch of sellers, which is where our red UFOs are. Those show us where the sellers are. Those sellers start at 1.2770. So that is going to be 1.2770. That is going to be the target. And we check that that makes sense, and we put that in, and we're going to put a little line as well so that we see that next time. And what I'm going to do, I'm going to place a little note just to say what we did here. So this was placed 20th of October in the live session. Okay, so I think we did pretty well there. We looked at our first opportunity on the on the TradeStation scanner, and we found this opportunity. This is using a daily chart on the left hand side, a 55-minute chart on the right hand side. We're using Oanda data because that's the same data that is used by TradeStation. But of course, you might use different brokers and therefore have slightly different data. Use the data that's relevant to the broker that you are using, because those are the prices that you're actually going to be buying and selling at. So use that data, but it shouldn't be too different. It might be a couple of pips different. Now, what we usually do when we do these sessions, and I should have actually said that at the start, is we are streaming on multiple platforms. So we are streaming on Facebook, and we are streaming on LinkedIn and YouTube and Twitch and loads of places. We're also streaming within our closed coaching community. Now, within our closed coaching community, people are paying a small monthly fee to have access to more of our time in the closed environment. So what we do is we do these sessions, and around about the halfway mark, which is around about now, after we've placed at least one trade, which is around about now, we cut the stream to the free streaming sessions, and we continue within the closed coaching sessions, placing more trades in there with the people that are in the closed coaching community. So that said, that means I will be loving and leaving you. For those of you that are joining us on the free sessions, hopefully this was helpful. If it didn't make any sense at all, don't worry. If you're new to this, the more videos you watch, the more it will make sense. If you have questions, just reach out. I'm always happy to help. Ideally, questions would come to tradewithufos.com/Becky, because from there, if you post the question in public, I can post the answer there, and then other people can go there for their questions. It might even be that questions you have already been answered down here. So ideally, that's where you'd go. Or you can email me, becky@traddictiv.com. So what I'm going to do now, I'm going to cut the stream to the free places. Those of you that are waiting for me in the closed coaching, as normal, you know it takes a few seconds for us to do this, so just bear with me. Otherwise, guys, those that are joining me elsewhere, I will see you next time, and I will be back on Saturday, I think. I think it's Saturday for a sharpening session. Might be Friday for a stock session. I'll be back soon, so I'll see you guys soon, and like I said, reach out if you need. Bear with me in the closed coaching, guys.